Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into a bit of a macro view for Bitcoin, taking a look at what's been going on and whether or not a Wyckoff accumulation pattern can now fit. You'll remember from a few months ago, I was tracking a potential Wyckoff accumulation pattern and it just didn't play out. It may now be back on the card. So in this video, we're going to jump into it, we're going to draw it out, and we're going to see exactly what is going on with this Wyckoff accumulation, whether or not we think we're inside this pattern or not. As I get into this video, if you find it useful or informative, smash the like button. I do appreciate that. If you're new to the channel, subscribe and tap the bell, select all notifications. You will not miss another video update. If you haven't yet joined us in Discord, check it out. Linked in the description down below. It is the first place that we go to notify you of everything that is going on in the crypto space. So why not check it out? Linked in the description below. Let's jump right down into this one though. What we're going to do is we're going to kind of just start with this blank canvas essentially. There are two schematics. I've spoken about this before. We have pattern number one, which is actually this one here. Okay, and this one actually has a spring event. You can kind of see it down at the bottom here. Okay, so everything in phase A and half of phase B remain the same, but you end up with a slightly different phase B second half and no spring event in Wyckoff accumulation pattern at number 2. So you can see that there's no spring pattern in here. So there's a scenario for wherever the money sits, because it's about liquidity, right? It's, are they able to accumulate, institutional players, are they able to accumulate the Bitcoin at the right level? And so they need to be able to play out a particular pattern to do that accumulation. Okay, so there's two variations to this. As you can kind of see, as I just flick between these, there's only really a slight variation at the end of phase B and in phase C. Okay, you can see those differences. Then of course, phase D pretty much remains the same and E remains the same. Okay, so those are the two patterns that we're going to be talking about. You can see that I've just dropped them here into our trading view. Okay, so what we're going to do is I think we basically start from the left hand side of these patterns and we start moving them across. Okay, so the first thing that we need to do and we need to acknowledge is where are our peaks and what do they potentially mean? Okay, so for the first thing, we were tracking over this side as our potential just over here, in fact, as our potentially our selling climax up into our automatic rally up here, and then resistances up here. Then we had our secondary test in phase B, and then we were hoping that this area here was going to basically be actually this one here was going to be this little peak just up above the automatic rally, right? We want to be just above the automatic rally, but we don't want to be above the resistances. Now, of course, we pushed above those resistances, okay, meaning that we could not have had the selling climax, the automatic rally, the secondary test, or any of that kind of stuff. So essentially, that means that we have to kind of push things down here a little bit. It would mean that this potentially is our selling climax with an automatic rally, our secondary test, and then up here into our resistances. Now, if this is the case, that puts us right about here on the schematic, okay? And so let's go ahead and draw these in. So to start with, what we'll do is we're gonna label up this one just here. Okay, let me just find my PS. Okay, so that is our preliminary support level right in there, okay? And we can see that one. Then what I'm gonna do is I'm going to draw in our selling climax, which would have been down in here. Okay, and we'll just go ahead and label that one up selling climax as well. Okay, so there we go. So we have our selling climax. So far we've had our preliminary support. We bounced up and then we fell down into the selling climax. From here, we had an automatic rally that puts us up here. So, okay, we're going to draw that into here and we'll just let me grab that. I'm just going to move that over there for a second. We'll drop in here the automatic rally. And then at the moment, I don't think we're necessarily finished, but we're looking for the resistances. And I think that's going to be coming in at around the 30K. I'm going to put this right up here around 30,000 just for now. And I will label this resistance. There we go. Okay. So we end up with this kind of schematic so far. So what does this mean? Well, it means that we still don't know which one of these patterns we're following. It means that we have essentially come down into our selling climax. We've had an automatic rally, which I can go ahead and just move a little bit further over here if we need to. Automatic rally. Then had this move down here, which is our secondary test. So I should label that one up as well while we're here. So I'll go ahead and label that one our secondary test. There we go. So we have that one. And I'll move that over there. Okay, so automatic rally, secondary test up into the resistances. Okay, and now this is where we should get rejected and start to come on down. And that is really then a secondary test in phase B, which would have to be a new lower low. Okay, now that's going to split opinions with people because people really want to be in a bull market. But ultimately, that is where the only way that this schematic I can see can get us to fit in here. There's no way that I can see us looking as if we've done a spring event already or anything like that. There's no way we've had this peak up here in phase B above the automatic rally anywhere other than where we were previously. So the only way to do this is to delay it and actually push it further down the chain here. But again, that's going to split people's opinions, but it would basically mean that we'd have to come down into a new lower low, and it would have to be somewhere down here. If I go ahead and bring this in, we're looking for the secondary test of phase B right down here somewhere. Okay, so essentially what we're saying is that we would expect to see some kind of move to the downside. Now that could be a 5-wave structure. It could be something totally different. I don't think it would be a 5-wave structure, but that's something that should be possible to acknowledge. It could be that actually what we end up doing is more of a kind of 5-3-5 like this. That's really bad. Let's draw that a little bit clearer. Then we kind of go up in a 3-wave structure and then finally come down into another move like that, for example. Okay, and we kind of come down into new low lows. We don't really know how that's going to play out, but I imagine it'll be choppy. I don't think it's going to be just a straight drop straight away, but it'll be interesting to kind of see how it does play out. But ultimately, the way that we draw this, and you can let me know whether or not you think this is something that is going to happen or not, whether we're following a Wyckoff accumulation pattern or not. But if we are, then essentially we're looking to move up towards 30K in line with what we were talking about this morning with Elliott wave theory and smart money concepts pushing us up into those ranges, and then kind of coming back down, and it will be an interesting kind of structure. It could be, a WXYXZ. It could just be a big 3-wave structure. Could be something totally different, right? Now, once we've done this, once we've come down into this low, we then have another move up into our resistances. Okay, so let's hypothetically say that we just do 3 waves coming down here, and we come into this new low. Okay, it doesn't have to be big, it could be whatever. And then once that is done down here, there's going to be another move upwards that people then start to believe that that bull market is in. Okay, now this is where we peak above the automatic rally, but do not cross the resistances. And that's why we failed over here, thinking about us potentially looking at this as our secondary test in phase B previously, as because we peaked up above the automatic rally, which cannot happen in either of these schematics. So when we see this, it would peak up here, and then we would basically potentially finish this off. If that's 3 down, 3 up, we could then argue a spring event occurs down here. Now, with that, there's no guarantee of a spring event, because that is where these two patterns change, right? This phase 1 or pattern number 1 here has a spring event, but pattern number 2 does not. Okay, so it's no guarantee that you do. Okay, so if I come back to the chart here, we think about this. The secondary test in phase B may actually just be the actual bottom of the pattern and it's complete there. Alternatively, it's possible that we do come down one more time lower than this. So it's going to be one of those. Wherever the money and the liquidity sits is ultimately where the price action is going to go, because a Wyckoff accumulation pattern essentially is all about how institutional investors are manipulating the market and pushing the price in a direction. It's no surprise that there's more than one schematic to follow, right? Although a lot of people probably don't even know or realize that there's a Wyckoff accumulation pattern number 2, and a lot of people on like YouTube, Twitter, and various other social media platforms, they only ever talk about pattern number 1 with the spring event, right? They always say, oh, the spring event's happened, or we're about to have a spring event, but they don't realize is that you don't have to have the spring event at all, and there's actually 2 different patterns depending on where the liquidity sits. If everyone is going short on the market because they're expecting a spring event, then you can bet your bottom dollar that essentially we're not going to see the spring event, we're going to move in the opposite direction, and a lot of people are going to get liquidated because that's where the money sits. Okay, the aim of the institutional investor is to acquire the BTC. So if we are to think of us trying to get ahead of the curve here, we have to think like a whale and not like a retail investor. Go for the money, go for the liquidity. Don't just blindly follow Moonboy saying that we're going to $1 million Bitcoin, for example, right? So Wyckoff accumulation pattern. This is now the only other one I can see in the data that shows us with the potential. And it also quite lines up quite nicely with Elliott wave theory, assuming that we have a Z wave taking us down into fresh lows. Again, that's quite a broad range for that Z wave as it stands at the moment, between $10,000 on the low side and $16,000 on the high side. So I've always said 14K seems to be a nice number to be aiming towards. We came close to it back in over here in November. We got close at 15,400, but we didn't quite get into those lows that we were kind of expecting. And we don't have the structure to the upside that you'd expect either. So for the most part, it's looking like we might actually be in this particular pattern, this Wyckoff pattern. And if I draw in some horizontal lines here, we would basically be able to look at this area right here. Yeah, right about here as our phase A, right? So we've basically just done this phase A section, and we've still got a long way to go if we're in the Wyckoff accumulation pattern. Let me know what your thoughts are down in the comments below. I just wanted to kind of do a quick update video. Obviously, it didn't play out the last time that we drew this, so we want to know whether or not this is now the new potential Wyckoff accumulation pattern. Let me know what your thoughts are on this down in the comments below. Really interested to kind of get people's thoughts and opinions on what they think is going on with BTC. It definitely doesn't feel natural in the way that it's moved to the upside. I do see a lot of resistance up in that 30K area, so I do expect us to move back down. But do we expect to see a secondary test in phase B and take us down into new lower lows? And do you think we're actually just about to enter or just entering into phase B? Let me know what your thoughts are in the comments below. If you found this useful and informative, hit the like button. I do appreciate that. If you're new to the channel, subscribe, and don't forget to join us down in Discord. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.